Good morning, afternoon, or evening, or whatever time of day it is when you're listening to this. Welcome back to another episode of the Winnipeg Market Watch podcast. Today, I am joined by my co host, Denzel Sullivan, and we do not have a special guest for you, but don't you worry, we will be bringing several more guests on here over the next few months. Just due to some scheduling conflicts, it's going to be only Denzel and I with you today. Denzel, how are you this morning?
I'm feeling pretty good. It's been I can't believe it's already June. I feel like it was just yesterday we were starting up this podcast show and the year's just flying by.
You
So,
can
yeah,
say that again.
yeah, I know we're both super busy, so it's just kind of like the week kind of blinks by. But overall everything's really good. So,
Awesome. I absolutely love to hear that. And I know just from all of the work that you and I do together that you had an unbelievably busy May. And it's looking like at this point, even though we're technically 10 days into June at the time of recording this, just by the nature of when we put episodes out. Just for those of you at home who are wondering, the market data is always released the first weekday of a month, and we always record the podcast the following weekend after that. So if it seems like we were late to the draw here, it wasn't actually anything that we could do just because the first of the month happened to be a Saturday. The
mm,
market data wasn't available until Monday the 3rd, and therefore the earliest opportunity we could be releasing this is Monday, June 10th. But where I was going with that little tangent there is Denzel and I are basically in a position where we've got a lot of product coming to market. Denzel has a lot of acquisitions that were initiated in May. There's a lot of projects that are still being worked on. And from the realtor side, I have a ton of people looking to buy, a ton of people looking to sell citywide. And we're going to break down all of that for you guys here in today's episode. So, first things first, Denzel, let's talk a little bit about some of the market data from the month of May. Now, let's chat a little bit just at first here about the big thing that happened on June 6th or 5th or whatever day it was. I'm starting to forget already. But we had our interest rate announcement here in Canada. And the Canadian Central Bank essentially cut the benchmark interest rate by a quarter of a percentage point, which was widely expected to be the case. And that has caused some interesting discourse throughout the industry. Before we break down the numbers, Denzel, any comments on the big interest rate change?
I think it's definitely been a long time coming. A lot of people who have um been eagerly waiting for this interest rate announcement finally got the news. And I know for myself, real estate actually has been quite hard, over the past couple of years just because of the rates. If I even go back to last year in November, it was almost it was really tough to get someone to even write an offer on nice stuff. So, you know, now that that interest rate cuts happened, I feel that in the coming months we should see sentiment among buyers and sellers actually continue to go up, and them feeling good about what's going on in the real estate market. I think that affordability is going to improve, obviously. But the biggest question is what's going to happen with prices. At least that's what my curiosity is, because with all things considered, it's already getting pretty expensive again, or at least back to where we were just before the rate hikes happened. So I don't know, just thinking about a world where prices get even higher than now is sort of crazy. But it's good news to say the least for anyone in real estate, for sure.
Yeah, I think that I agree with pretty much everything that you had to say there about that. I'm just curious how much of these small rate cuts are already kind of priced into the market, like based on the buyer's expectations that they would or wouldn't occur. And
Mhm.
I'm wondering if the run up that we've already seen this year was based on buyers understanding that rates would likely come to where they are now, and if that is the case, how many rate cuts were people psychologically putting into their purchasing decisions throughout the last, well, at least 5 months or even 6 months of data. Just for those of you who may have forgotten, we actually, for the first time in a very long time, saw a very, very modest uptick in pricing in December of 2023 versus November.
Totally. Yeah.
Um, but as for the actual market data for this month, the Winnipeg benchmark price has now moved up from April, where it was, again, this is interesting too. From the time last update was published, the board revised the April benchmark price. And it was a very slight change by about $1,000. And the April benchmark price was actually revised up to 415,300 in April. I don't remember what the previous update actually said, but the May benchmark price is 416,900, which is a gain of 0.39%, leaving us up 9.74% year to date and leaving us down 2.84% from the all-time high, which we know was May of 2022. So once again, we are now in a position where there's only been 4 months in history of the city that have had a benchmark price higher than what we're experiencing today. And those months are February, March, April, and May of 2022. And all of those months at most are 2.84% higher than where we are right now. Most of them are closer to about 2% higher, meaning for all intents and purposes, pricing is any pricing difference between now and then is negligible.
Mhm.
So Denzel and I talked a little bit about how, how can prices go higher from here? And given the time of year and the very modest increase in price, Denzel, what do you think is going to be the situation we're going to be facing in June, July, August, and beyond here in Winnipeg?
Um, I think that even with the rate cut happening, seasonality in real estate is still a thing. I'm not 100% sure what to expect this summer coming up. Um, I think you and I had a brief conversation last week, something about how busy you were and how busy I was last summer.
Hmm.
And, you know, judging by that conversation, it sounds like there's definitely still buyers who are looking to buy. But I also have a bit of traumatic experiences from listing property last summer, just because there was just, again, last year was a different story. And so there wasn't as many buyers, in my opinion, as there is right now. And so I do think that prices will probably either go flat from this point onward or very, very modest upticks in the price, provided that, if we get another rate cut in July and there's just even more buyers that are getting pre-approvals today to look to buy before, the fall slash winter season comes up, then, I think the summer is going to be pretty busy and we'll be pleasantly surprised to see that prices are staying where they're at. Now, I don't know if we're going to see like a huge hockey stick kind of trend from here on out with prices, but looking into 2025, I do think if the Bank of Canada continues to cut the rates, I think the spring market of next year is probably going to pass this year's highs and May 2022's.
Well, I would say I definitely agree. And for those of you who have been reading the Substack articles for a while now, you'll know that the very first article I posted on Substack, which I'm going to pull up the date for here in just a moment. But for those of you who remember, the first article ever written on this channel was called All Time High by Spring of 2025. And that was published in April of 2023, which, just so some of you know, at that point in time, we had been basically 3, maybe 4 months off of a low in pricing that was below the benchmark price for most of 2021. So it's very interesting to me that that's now kind of, well, at least Denzel's opinion, but I also think the opinion of many people in the space who seem to think that we could very easily end up in a position where pricing skyrockets back past everything that was lost in the end of 2022. And then, of course, our nice gain in 2023 was a good reprieve, but we're going to see if we can breach that May 2022 all-time high sooner rather than later. And I couldn't agree more that next year does seem very likely to be the year that that ends up happening once again. And it's in part due to rates. It's in part due to demographics. It's in part due to people just knowing that for lifestyle reasons, they have to move, whether they like it or not. Winnipeg is a city where most people buy homes to live in them. And only a small portion of our community is doing what we're doing, and that is investing in real estate. And that's very different than the bigger markets where people have viewed real property as a vehicle for earning a return first and a home second. And I think that's part of what makes Winnipeg real estate special, for what it's worth. But we'll move along here. Beyond the interest rate cuts and beyond the very strong activity that we've seen in the first 5 months of the year, I did want to take a second and point out that May has been, for at least 2 of the last 3 years, the highest data point on any part of the HPI chart, with the exception of 2021, which it was June. So Denzel, understanding that even if rate cuts continue to happen, and that would be wonderful if they did, knowing that it's either the month we're currently living in or the month prior that is typically the high in terms of pricing, how are you viewing your upcoming listings, and how are you pricing your stuff strategically in order to get the most and the safest return for the dollars that you're investing in the market today?
Yeah, so for based on my experience, again, June being May and June being easily the two most busiest times of the year, my strategy is very focused on how do I stand out right now among the other listings on the market in the areas that I have stuff coming out in. And what we've done is we've just priced our product really aggressively, knowing that there's a high probability of us being carried up to what the likely ARV is. Um, and so far this year, it's been a great strategy. It's worked out phenomenal. I won't get into, some of the highlights of last month with some of the flips that I had. But we've been very successful in getting this stuff off the table in less than a week or a week's time. And I think it's due to the pricing strategy that we've implemented this year. In years past, what we've done is we've priced it at what we thought it was worth, and we just would wait for a buyer to come around and pay what we wanted. But business strategy has definitely changed for me and my business this year, and we've pretty much put the velocity of capital at the highest priority, meaning that the most important thing is actually getting liquid in these flips. People make the mistake of pricing their flips too high because they have a pipe dream of what their property's actually worth and what someone should pay. It doesn't matter what someone wants to pay or what they should pay. It's what the market's willing to bear at that given time.
Mhm.
Flipping houses is a lot like day trading in the stock market. So you really have to have a good pulse on what's happening, what's selling, and what everyone else is doing in terms of pricing strategy. If you're like me and you watch the MLS like a hawk, you'll notice that almost every great outcome that you hear about, 50, 60K over asking, 100K over asking, it's because they're priced artificially low. Those houses are priced so low that it gets the most amount of buyers through the door. And when the offer night comes around, you get like three, four people wanting to fight over the same house. And it's what we've done since we started the year out, and it's been great. And we're going to continue that pricing strategy, for the remainder of the summer season, and do our best to get these flips off the table and move on to the next.
And if the real estate board is listening in on this, we are pricing these properties at a number that we would absolutely accept had they been the only offer. And based on the data, those price points are still completely fair for the product and the risk. Just to make sure that that is abundantly clear. I know you're listening. And
Yeah, exactly. Yeah.
yeah, uh, just to make sure that everybody knows that. But um, the idea does hold true, and it's no secret to anybody out there listening that when it comes to pricing a property, the price has to be attractive. Because if you started asking for numbers that were far beyond what the market would be willing to bear, you simply wouldn't have anybody come to look at it, even if the home were awesome. So I agree wholeheartedly, Denzel. The exact sort of thing that you've described there is the way to win in Winnipeg in today's market. You need to put the price for whatever it is you're trying to sell at a number that the market is willing to bear. And we're in a city where people love deals. Just very simply put, the buyers in Winnipeg want to feel like they win. And usually, if you're paying 100,000 or whatever over an asking price, you don't really feel like you won most of the time. So it's the job of the seller, the agents involved, and the buyer to make the experience such that you can take them into the property and say, look, the asking price is this. The data indicates the range of what it's worth could be from asking up to pick a number, whatever that happens to be. Where are you comfortable to be? Because every other buyer's agent knows that, and they're telling their clients that you tell me the number you're okay with. We're not going to overpay unless you want to, but let's pick something that works so we can be the one that gets the call back. And whether that's an accepted offer or even a counter, that's all you can ask for on the buy side. And I wanted to reiterate that because we talk a lot about like what we are doing as the listing side and what the desire of the seller should be and the psychology of the seller, but really it's the buyer that's writing the check and sending the mortgage wire at the end of the day. And I think understanding how those conversations go when the buyer's agent is on the line and they've got an offer in play is paramount to winning in today's market.
I 100% agree.
Let's take a second here and just talk about supply in the Winnipeg market today. And this is something that I found very interesting when I was reviewing the data back on June the 3rd here, which feels like a lifetime ago already, by the way. But the May data surprised me in a few ways. And the first of which is when the real estate board compiles all of the data for all property types, um, it this trend was not captured. However, when you look only at the detached sales, which is really all Denzel and I and others in the city who trade regularly seem to look at or care about, just because that is the bulk of the property that our city has, I noticed a few trends. And the first of which is both active and current listings are down year over year. And the second thing is the number of sales are up year over year, almost to the same level that we saw in 2022 at this time. Now, remember, 2022 May was the all time high in pricing. And in many metrics, we are just shy of 2022 to a shocking extent. Now, the biggest one to me, though, is in terms of dollar volume, we are right back at 2021 and 2022 levels, very, very slightly under, which, just so you guys know, is about 20% higher than last year and 50% higher than 2020. Denzel, what do you think about that? The fact that our supply situation is now right back to where we were in the heart of the COVID market and the volume of sales is approaching that same level.
Again, I think it's a really exciting time now that I've been through a downtrend in real estate. I have a way broader perspective of what kind of strategies need to be implemented and the decisions that need to be made on a day-to-day basis with everything going on in my business. I also do believe that supply picture being where it's at pretty much marks us in, and correct me if I'm wrong, Keenan, we're in a seller's market at this point. Is that right?
Yeah, we're in a deep seller's market right
Deep
now
seller's
per the
market.
data.
So it's for anyone who's been experiencing any kind of pain in real estate because you bought at the all-time high and you kind of went through the past 2 years kind of shaking your head saying, why the heck did I buy that thing? Now's the time to capitalize on trying to liquidate some of those bad deals. Um, if you had to carry it through all of 2023 and halfway through 2022, now is the time to start, or yeah, now's the time to start unloading some of these things if you have the means to. Um, I think it's really exciting to see those kind of numbers again. Uh, and I'm also just, especially with that rate announcement, I think it just is further clarification that that is what the forecast is looking like in terms of where rates are going. So I think for anyone who's looking to buy, because I still have quite a bit of friends out there in the market looking to get into their first house. It's a good time to be looking because while there are people who are acting now and buying and selling, there's a whole lot of people still sitting on the sidelines who think that it's real estate Armageddon and who just aren't up to date with what the realities are. So, before pricing gets even further out of reach, I think that it's important that people just at least, start to change their tune a little bit about what's happening. I'm not sure if you can add to that, Keenan, but that's kind of where I'm at with the supply picture and absorption and things like that with this year.
The one comment I'd like to make in response is for those of you that are looking to either get into a home or invest, and I know those are two completely different um, buying motivators, but especially for those of you looking to invest, I think it's important to mention that a huge percentage of the real estate investor community and the psychological sort of hive mind of the group has really experienced quite a culling over the last, call it 18 months. And that's probably an oversimplification, but point being, the field of people looking to do what we're talking about here is now way, way, way smaller. And when that occurs, it means there's way more good deals to go around for those that are still active and trading. So in 2021 and 2022, like you can go to a real estate networking event or to any kind of investor party, investor seminar, and it was absolutely jam packed everywhere. And people and faces that you never seen before are going in there and talking about real estate. And it was this big, sexy thing that everybody was kind of just jumping into wholeheartedly. And it was you know what I mean? Like I'm painting the picture correctly, I hope. But looking back at that and then looking at the way things are now, I can say that room and those rooms are about half at least of what they used to be.
Yeah.
So
I just want to add something else, Keenan.
yeah,
And
go
so,
for it.
just thinking about where we are today and my experience from when I started, real estate used to, well, was, and to me still is, a very popular investment. But since the rate hikes, it's became something where people look at real estate, especially if it's their first go at it, they're like, man, that's the most riskiest thing that you can do. That like just the overall sentiment towards investment in real estate has just gone down in completely. A lot of guys that I know who are some of Winnipeg's biggest buyers for investment property are now on the sidelines and or out of the game completely. And so, I mean, for people like myself and anyone else who's listening who's still in business, that allows all of us to, get a little bit more opportunity coming through the door. And, if the capital is available, we can act on these opportunities. So, yeah, I just wanted to add that because I do find that extremely fascinating because, going into this into business, I never thought that I'd make it to this point or get to this big rather. But I just find it so fascinating that it really does work that way. If people start to drop out of the game for whatever reason, that market share of what they had now becomes someone else's. And so I feel like I've kind of experienced that this year, just with the amount of deals that I've been getting and phone calls from agents, phone calls from my flyers, everything.
I completely believe it because I'm really like kind of racking my brain to think of any of the new faces that would have jumped in the last 12 months and like gotten really big, and nobody's immediately coming to mind. My apologies if you feel like that's you, and if you do, like reach out to me. I'd love to chat. But Like, look, it seems like the people that are still around have been kind of going for a little while. And yeah, it's interesting to think about because on the agent side too, and I don't actually have the statistics in front of me. This is just a feeling, but I've noticed a lot fewer new licenses in terms of realtors coming out and jumping in the industry, which is not what I experienced in 2020, 2021, and 2022, where it felt like kind of everybody was just getting a real estate license all of a sudden, and there was an almost endless supply of new agents. But yeah, not so much the case now. Um, One last note on the May numbers specifically before we kind of go into some other stats and talk about area breakdown. One feature that I thought was very interesting about this particular May is if we compare the average sale price, which is different than the benchmark price month over month. The average sale price of a detached home in April was 436,500. The average sale price of a detached home in May was 425,300. That is a decline. The average sale price went down in May versus April. However, averages aren't always good. Like, averages are not median. That means there could have just been a few fewer really, really high sales or a lot of people buying a lot of really small stuff that month. But the other thing that I do think matters is when the average sale price of a property or of an area or a city or whatever is above the benchmark price, that is still a very good indicator that the benchmark price will likely be carried the next month. And I wanted to point that out because even though the average did go down, we're still above the current benchmark HPI price. And I'm expecting to see at least one more month of slight gains here into June, maybe even a good gain, who knows. But I think that that's one of the best indicators that we have at our disposal to predict what the next month of data is likely to look like in our world of real estate. Any comments on that at all, Denzel?
No, I'm on board with you with that for sure.
Okay, good stuff. One interesting data point this month, and I know obviously it's not worth like really talking about in terms of making investment decisions based off of, but the month of May was actually the busiest in terms of multiple offers that we've seen so far this year, and actually for all of 2023 as well. Just so those of you out there know, we are at the point where we had about 51.5% of homes selling at or above asking price in May. And that is, just going back on my notes here, the most that we would have seen since June of 2022. So, with that in mind, Denzel, let's think about some of the stuff that you've maybe sold this year. And from the top of my head, would have said that most of the listings that you put out there did receive multiple offers and
Mhm.
sell above asking,
Yeah.
with the exception of a few. But I would say a lot of them did.
Mm.
And is this the strategy that you're still going to be looking to deploy into June and maybe even July?
Yeah, like I mentioned earlier today, I've had a lot of success with my projects, listing them at an attractive price and bringing the most amount of people through the door to come have a look. Um, I think we will continue to use this strategy, but as we go into the summer months, it'll be a kind of week by week basis to get a sense of what the activity is like out there. Um, as a more of a in order for me to stay up to date with how things are going in the market, um, I'll make some calls to some other agents and I'll just strike a conversation just around how they're doing, how their business is doing, how many buyers they're working with, what are their pre-approvals, just so I can kind of see who's out there shopping, and almost every agent that I talk to, everyone's super busy as of today, which is June the
Mhm.
10th. Um, Now, for some of the product that I have coming up in July and August, again, I'm gonna have to just take a really close look every week to see, what's traded over the weekend. Did this thing sell on the offer date? Did it not sell? And if the market softens and buyers, are out at the lake and not really having, buying a house as a high priority on the list, we'll have to adjust and maybe we start listing property where, we're slightly less than what we think that the house should be worth and we're offers as received and we come up with some kind of marketing strategy to still try our best to stand out in the summer months. Because while it's not exactly the historic average for it to be crazy busy in July and August, there are still good sales that can happen in those months as long as you have the right product and do a good job on the house that you're working on. So yeah, I think that's kind of what the plan will be for me at least, as we kind of head into the summer. But for all of June, everything that I have, we're looking to just blow it out, have it at a really attractive price, get as many people through the door and take advantage of this last wind of June, and then see what happens in July and August.
For sure. And I think that the fast sales strategy is a really smart way to go about a time of year like this where we are I think what we're saying without saying is that we both understand this is probably the last real heavy push for the spring. And
Mhm.
by the time, for sure by the August long, maybe even before that, the entire psychology of our market's going to change. And most of the investors will have made their money for the year. Most of the realtors will have made their money for the year. The buyers are going to be settled in their homes. They're going to be getting ready for the school year. The people who are considering selling probably already did. And those who are circumstantial sellers will obviously still be out there. Like the market still occurs after that. The frenzy just will seem to die down, and that is traditionally what occurs. But I'd like to circle back to one point that Denzel made about how most of the agents he's talking to are crazy busy, and I'd just like to mention that when I show up at my office, which is not a huge office, but we're all pretty good realtors, I'd say. Um, the looks on people's faces around our boardroom table and our island meetings on Thursday mornings are of sheer exhaustion. Like we've got like dark circles under eyes. We've got coffees larger than they probably should be. We've got energy drinks and Diet Cokes at 8 a.m. We've got like pre-workout containers when nobody clearly went to the gym that day, talking about myself. We're we're talking like just absolute like zany frenzy here, and pretty much everybody's got at least a couple buyers that are looking for something imminently. Pretty much everyone's got at least some kind of listing activity going on, whether it's like, oh, they're a new agent, they have one house up on the market, or they're an experienced agent, they've got those two houses that just don't seem to want to sell, plus a bunch of new stuff coming. It's it's wild. And I would say that that seems to be a trend that I'm seeing a lot too, where most of the people that I'm talking to, all of my industry compatriots, are generally speaking feeling the same way. And for what it's worth, I'm really looking forward to seeing how this plays out. And if this means we have another month of every single house in Westwood is listed at 399.9 with an offer date, so be it. Like I know how to play that game. And if it means that we start seeing high prices on the list side with offers anytime, then so be it. I know how to play that game too. And I'm happy to help buyers figure that out and navigate it because that's what we do. Now let's talk about some areas here, Denzel. I know that you've got a few neighborhoods that you've got projects ongoing in, and I'd like to talk to you a little bit about what those areas are and what you're kind of seeing in terms of the future for them. But I'd also like to point out some of the hottest areas that we saw in the last month and some of the implications for the whole city in lieu of that. Um, what direction do you want to start with? I'll kind of let you pick the order of operations here.
Maybe let's just start with kind of where I'm what areas that I'm looking at right now with the stuff that I have come in, and then we'll kind of go from there.
Yeah, sure. So why don't you tell everybody what do you have coming up soon? What areas are you acquiring in, and what neighborhoods are you keeping a really close eye on at this point in the year?
I have a ton of inventory coming up for sale in 5C, which is Winnipeg's West End, Sergeant Park. And a lot of those happen to be, or at least half of them happen to actually be rental properties of mine because I'm looking to liquidate and take advantage of the market right now. Um, that area 5C has always been a great place for people to start home ownership. And I think that the price category between 2 to 400 has been extremely busy since the beginning of this year. So with that being said, that area has a lot of property inside of that price. And so, I've been really having a close look at what others have been doing to, like from a pricing standpoint, so that they can have their homes at the top of everyone's list in terms of we got to go see that or let's make an offer. Um, I also have some stuff coming up in River Heights and in Crescentwood, and those are two areas that I'm always watching because while I have two projects going on, I do happen to get quite a bit of phone calls from either my flyers and from agents with off-market property in those neighborhoods. So the River Heights is always something that I'm looking at. And um, Judy Lindsay happens to have so much calls that come in from Westwood and Charleswood, so that's also at the top of my list. And we actually have a nice, cute little bungalow that we're going to be taking possession of later this month on Roblin. So I'm really pumped for that, and I know Keenan that you're looking forward to see that project come to life because I think it's going to be a great little house for someone who's wanting to get into Charleswood for a really attractive price. And so
Absolutely.
yeah, I think those three areas, along with obviously St. Vital with the sale that I had over in Pembridge earlier this year, it's an area that I'm always documenting and watching because I feel that the more I have a good understanding of what stuff trades for in all of the popular neighborhoods, I'm able to make really quick decisions on stuff that comes my way. And I know that the people that do business with me really appreciate that I don't drag my feet muddling and humming and hawing whether or not I should do a deal. So, it's good to stay up to date with that sort of stuff. And those are the main areas that I'd be looking at. Oh, sorry, one other thing. And I also have some stuff coming up in the Garden City area. And so that's new to me because I've actually never done any business in that neighborhood just yet. But I've been watching it closely because I recently picked up um, a beautiful 1960s bungalow in a really great neighborhood close to the Garden City. So yeah, that's another neighborhood that I'm excited to get into, and I'm watching every day what's trading in it.
Excellent stuff. Um, I'll just mention a couple of things here. So, first of all of those areas, for those of you who have been listening for a long time, should come as absolutely no surprise. Like these are some of the MLS areas that just got mentioned. We were still talking about in January, and while those projects have come and gone, that just happens to be the areas that we're looking. Second thing I'd like to mention is yes, Judy Lindsay Team Realty is the king of the west side of Winnipeg. So if you are looking to buy or sell in Charleswood, Westwood, Crestview, Deer Lodge, Woodhaven, St. James, or any of the surrounding areas, including Bruce Park, Sargent Park, whatever you like, we know those neighborhoods better than anyone. So please give us a call, buying or selling. We'd be happy to help you. Um, but as for some of those other areas, the one thing that really caught my eye there is I obviously am familiar with all of the addresses that you're kind of talking to me about here as you're describing the neighborhoods. But I wanted to take a second and mention the Garden City project. And I say that because the MLS areas starting with four, being that northwest section of the city, have all appeared to have somewhat of a hard time this year in relation to last year and the year before. For those of you who have been paying attention for a while, you might remember that the Tyndall Park areas and a large section of the Maples was very consistently at 90+% absorption in 2023 and made up some of the biggest MLS absorption numbers in 2022 as well. But in 2024, just looking at the list of the areas that start with a four, being that Northwest quadrant, only one singular area, and that is Tyndall Park West 4J, cleared 85% absorption, whereas every other neighborhood, I'm just kind of going to run down the list here. 4A, like North End, 45%. 4B, the other side of the North End, close to McPhillips, 57%. 4C, the North End near Mountain, 72. 4D, West Kildonan, 78. E, F, G, and H, all between 43 and 79%. Denzel, how do you feel about the change in sort of the desirability from a buyer's perspective in those areas? And do you think that this is the case of buyers just saying the prices are too high now, I refuse to pay this? Or do you think it's something else?
I definitely think that with the current inventory on the market in these neighborhoods, the stuff that sits is just again priced too high. There's houses that I feel should be priced a lot lower than what they're asking, and I think it's a combination of people still stuck on what they bought for back in 2022, trying their best to get the equity out of their properties because, some of them are rentals and you can very well tell they're rental properties when you're looking at the pictures on the MLS. And you know, I grew up in that part of town, and I know that there's a lot of people who would love to stay in the area, people that are around my age, especially wanting to get into their first house, whether it's in the Maples or in Garden City, Tyndall Park. I don't know so much about the North End, but those three areas that I just mentioned, I know that there are on people's list of places to live. But again, I do think that the prices are starting to get pretty inflated and for the value, and I think that's the biggest problem. Where a lot of people are asking for a really high price for houses that need work still. I think that the houses that are renovated don't have any problems in selling, but it's just that, if the price isn't right, no one's going to write on your house and it's going to be tough to move. And I was just looking just before we jumped on the show at some of the sales that's happened in Garden City. And there's a lot of inventory that has recently just sold that was 30 plus days on market and they went 20, 30, 40K less than list. And so that's just goes to show that you can't be pricing your property at an exuberant amount expecting to get that if you don't have the amenities that everyone's looking for. So that's my take on it.
And fair enough. I would say that anytime as a seller, if you ask for something really ambitious, don't be surprised if the market slaps you across the face right now. It's not 2022 and prices are not rising a percent a day. They're rising a percent a month. So hopefully you can live with that. But the uh, the gist of it is, I think both buyers and sellers at this time of year need to take a step back and think to themselves, like, how can I be reasonable? And being abusive to the buyer isn't the way to win in this market. And I think, Denzel, you're absolutely right. In those areas, it does seem like a lot of sellers were asking for way too much for what they actually materially had to offer. And they were kind of living on a prayer to get whatever they were asking there.
Mhm.
Um, let's talk about some areas that we haven't really discussed in detail at all this year. And those areas that I'd like to bring up are the Mid Kildonan and Valley Gardens section of the city, which for the entire 2024 calendar year have had extraordinarily high absorption. So, for those of you who are unaware, Valley Gardens is on the east side of the Gateway and Raleigh kind of I guess they're sort of just streets, but yeah, they run through the very far side to the east of East Kildonan. Valley Gardens is a neighborhood that was developed in about the 1970s and features a lot of very conventional bungalows, split levels, and the occasional two-story. Mid Kildonan and Glen Elm slash Fraser's Grove, being 3C and 3D, um, include the areas near the Red River as well as the middle part of North Kildonan and East Kildonan, north of Monroe Avenue, but south of Chief Peguis. Actually, it's south of even some other stuff. I think south of McLeod is more accurate. But those areas are fundamentally full of 1950s, 60s bungalows. Glen Elm and Fraser's Grove contain a fair bit of character homes mixed with 50s and 60s bungalows. And these areas are on an absolute rampage, and we haven't discussed them at all. I think I know why, but Denzel, any comments on these neighborhoods? And is this an area that you would be actively looking for a deal in, or is this just something that you're going to take note of and see what comes to you?
Well, if a area is, you know, great to sell in, if the absorption rates are high, what I was taught when I was doing a lot of my learning before getting into this is if it's easy to sell, it's hard to buy. If it's hard to buy, oh sorry, if it's easy to sell, it's hard to buy. And if it's easy to buy, it's hard to sell. And so in saying that, if you look at some of the areas that have lower absorption rates, So let's just take the North End, for example, where you said that what was it again for 4A? 45% or something like that?
45% at 4A, yeah.
Right. So, you go to 4A, everyone's looking to sell in 4A. You can get a deal to like we can go and write something right now, Keenan, and probably pick something up for a song in 4A, right?
Probably, yeah.
But, we turn around and look to list that thing, it's gonna be tough to sell it, and that's just kind of the thing that I've always remembered. So you think about Valley Gardens at 96% for the year. Every house that has ever went on market in that area has sold. The chances of us trying to find something in that neighborhood on or off market are gonna be tough because it's just the absorption rate's so high. So a lot of people are looking to sell on the market, looking to get top dollar, whether it's a fixer upper or not. People are buying it up. So that's my thoughts on it. I mean, we obviously haven't talked a whole lot in detail because I've never actually had anything in this area. I mean, we actually
Mhm.
did recently have something um, over on Simpson. A partner and mine did on in 3B, which actually had a pretty good outcome. Now that's not on the list, but it is on the east part of town. Um, but yeah, that's my thoughts on it. I think if you're an investor, especially if you're looking to buy in some of these really, really desirable areas, finding property and really high absorption rates is gonna be tough. Not to say that they don't exist, because I have something, on Mulvey coming up, and that's in Crescentwood, and looking at your chart here, like, that's one of the higher absorption rates. So
It
or one
is,
of the
yeah,
higher absorption rates. So it's not impossible. It's definitely, there's definitely deals in these areas, but it is a little bit more tougher to find them.
for sure. And let me just kind of parlay that conversation into a question about 5C, which has actually had a great year this year. For those of you who are wondering, 5C is somewhat of a polarizing area where some people love it and some people hate it. And I've never really met anybody who has a neutral opinion on the area for some reason, but this year it appears to be pretty strong with 78% absorption and a very high degree of both buying and listing activity. Looking at an area like that where you obviously have ongoing projects, you have long term holds, you have rentals that you're considering selling. What do you think of the activity in 5C this year at 78% absorption, 16 days to sale, and all in all, very strong dollar volume?
Well, I'm definitely pumped to see that because we have let me have a look here. We have 6 houses coming to market in the next 6 weeks in this area. So, that's music to my ears for sure. But I've always like when I started my real estate journey, I bought a lot of property in 5C. I have 14 doors in that neighborhood right now. And so while seeing these are super exciting, seeing the data is very exciting for me. I know that Sergeant Park is a great neighborhood. I mean, I live very close to the area. And I also do believe that there's buyers who generally will trickle in from Wolseley into Sergeant Park because they're looking to stay central, not pay the River Heights price, but still get the character that Sergeant Park houses generally have. A lot of the houses are built, there's wartime houses, there's houses that were built in the 1900s there. And so if anyone's looking for that character, still close to Wolseley and being central, Sergeant Park is probably the place to be. I mean, I don't know many that would, go on the other side of Arlington. It's still a little bit rough. But streets like Sherburne and Dominion and Ingersoll are really great streets, and I think you need to actually live in the area and have take a walk to see how great the neighborhood is. Because for a lot of people, they think about the West End and they just make a general statement about the West End, and when you think the ugly gutter kind of rough West End, unfortunately, Sergeant Park sometimes falls under that because it's also called the West End, right? So it's almost as if that Arlington is what separates it all. But yeah, that's kind of where I'm at with the thoughts on Sergeant Park and how it's going.
Okay, well, that's really good to hear. And I think that I would like to just add to all of that that for those of you who are considering buying your first home or even your first rental, what you're likely going to find is this is the process that a lot of buyers will end up working with. Okay. They will try to buy in a B or a C tier area, and they'll aim for something really conventional and very quickly realize that they're going to get priced out and beat up super badly in those neighborhoods. And so then throughout their process, they'll discover an area like Sargent Park, like 5C, and they'll go and check it out. And their first question isn't, oh, this is so wonderful. Why didn't I know this is here? They'll say, okay, what's wrong with it? And then as soon as you get that question, like, okay, what's wrong with it? That's when the conversation needs to turn to, no, no, no. Like, you're asking that because that's what everyone's asking, and everybody's just a little bit unsure of this area. It's the same with 4D.
Yeah.
It's exactly the same sort of situation where everybody stops and goes, okay, what's wrong with it? Not, oh, are we overlooking something?
All right.
And while it is important to note that both 4D and 5C have a lot of houses, meaning there's obviously going to be derelict ones, but there's also going to be beautiful ones. As an investor and as a first time buyer, I think it's important to realize that you need to take stuff at face value and don't worry so much about what something was. Think about what it is. And if you're able to do things to a property to increase the value or to make it appropriate for your lifestyle or make it meet your needs in one way or the other, then in my opinion, 5C is as good of an area as any. And I would say that for almost any purpose, holding property in a neighborhood like that is probably going to serve you well in the long term. And there's a reason that there's an MLS area 5A for east of Arlington and MLS area 5C for west of Arlington. And hope that kind of sums it up. Now, let's just have a quick wrap up on the data here because I know we're trying to keep this episode a little shorter just in lieu of the special guest, but um, I just wanted to add a couple things to the overall area analysis here, Denzel, where it seems to me that the city at large is still experiencing this effect of most of the most popular areas having average sale prices below 450.
Mhm.
There's a few exceptions to that. Like I'm just looking at the list. Um, we have areas like River Park South. We have areas like White Ridge. We have areas very close to 85% that are not actually kind of on the main list, but most of the neighborhoods that we're talking about that are really hot are averaging close to 400,000. From a perspective of selecting investments versus assigning investments, are you still seeking areas that will end up with an ARV of between about 350 and 450 as your number one priority, or are you looking to break into lower or higher price points at this time?
I think we've had a ton of success playing in that sandbox, essentially everything from 200 to 450. I think that's where a lot of the bulk of the buyers seem to have their pre-approvals in. Um, and so we'll continue to aim to have property that will be listed inside of that buy price. But that's not to say that if the right deal came around, we wouldn't delve into that. Like for example, I just recently had a lead that came through the pipeline and the ARV is, somewhere between 5 and 550. Um, while that's a higher ARV than what we've done this year, my opinion is as long as you have multiple exit strategies with that house or with that property, taking on a larger risk with a higher ARV is okay. Like if I know that I can close on that house, put some very cosmetic rehabs into it, or maybe not none at all, and just go to market and make a smaller profit, I'll do that because it just means that you can pivot at any point in time. If I'm 1 to 2 months into the renovation, if I feel like, the market's softening, I don't know if this after repair value is going to be there by the time we finish. I think we're going to look to liquidate now so that we can put the money into something a bit more predictable. I think that's smart. And I think that if you find yourself in a situation where, because again, we're heading into the fall market at this point, I'm looking at, or summer and fall. And so you need to tread carefully because although everything's all hunky dory and people are happy and excited about the rate cuts, we don't know what's ahead. We don't know how people are going to react. We don't know what could happen with the government. And so you kind of just need to take the information based on historic data and events that the summer market might be slower and just be careful out there. You know, that's uh that's probably what I would say to that.
It's a good message. Be careful out there, everybody. I think that's a good way to approach business at a time like this. And who knows? Maybe we'll see sub 2% interest rate cuts, and houses will double in price next year. And if they do, then congratulations. Maybe not. And I
I'm
would be in the
definitely
camp of maybe not. So
yeah,
definitely be careful out there and prepare for the worst, and be positioned that if the best does come, that you have a nice gain. But
yeah.
with that being said, Denzel, is there any final thoughts that you'd like to leave us with here for this episode, or any questions in general that are kind of lingering in the back of your mind before we sign off?
I just wanna make sure that everyone is well aware of where the market's at. You know, Keenan and I, we just spent a bunch of time kind of dissecting what's happened the month of May. But you know, the market's good right now. So if you're thinking about getting in, or if you're a first-time investor looking to get into your first deal, now is not a bad time to start taking action. And maybe you're looking to get into the rental business, get that pre-approval done. Because I mean, again, the trend of where interest rates are headed seem to be down, right? I think in the next by 2025, I read something somewhere on BNN that Canada should expect to see 1.25% in cuts over the next 8 months or 7 months or something like that. Um, Whether that's actually going to come to fruition, I'm not sure, but it's good information to kind of be forward looking. Um, yeah, so I'm super excited to see what comes of the deals that we have coming up, Keenan. I know that we have an offer date tomorrow,
Mhm.
that I'm looking forward to see. And yeah, that's about it.
Well, good stuff. I'm also looking forward to assisting with the multiple listings that you're going to be bringing to market this coming month. Well, probably and beyond that as well. And I know that there's a lot of exciting acquisitions and exciting ongoing projects for the month of June. So I'm very optimistic looking into this next few months, and I think that the next at least 60 days are going to be a real push here, and it's going to be kind of defining of the year. So when
Yeah,
we have our December end of year episode where we kind of recap the entire calendar year, Denzel, I want to like call back to this episode and just say, wow, think of how busy we were when we recorded the May market update on June 10th, and all of the stuff that was going on, and then talk about how awesome it was that we managed to pull it off through all of our hard work in the weeks to come here.
totally. And bu there's one more thing that I want to mention, and
Okay.
it's to publicly congratulate Keenan on selling um 2 apartment blocks last month too. I don't think you mentioned that, man. That's
Yeah.
huge. I
Oh,
mean, I
thank you,
know
Denzel.
that Keenan helped out in, executing a seven-figure real estate deal, so that's super exciting, man. I know that you didn't mention that, but it's because no one asked you or brought it up, so congratulations on that.
I really appreciate it. And for those of you listening, that was a very exciting transaction. And I am obviously just as much as I'm interested in investment real estate, I'm also very interested in commercial real estate. And I had an absolute blast assisting in the listing of basically two multifamily units side by side in Osborne Village. The seller was very happy with the outcome. The buyers are thrilled, and it was a completely amazing experience and something that I'll never forget. So thank you for mentioning that, Denzel. And if those of you out there have anybody that's looking to sell multifamily, or you're looking to buy more expensive multifamily, I'd encourage you to reach out. DM me, email, whatever, Instagram, any of the above are fine. Contact me somehow, and we can have a chat about how that might look.
Awesome.
Okay. Well, anything else for this one then, Denzel?
Nope, that's it.
Okay, good stuff. Thank you guys all for listening, and we are looking forward to seeing you next month.